Welcome to Remarkable Retail Podcast, Season 6, Episode 4, presented by Marketile. I'm Michael LeBlanc.
And I'm Steve Dennis.
Great episode for the people here, Steve, as we had the opportunity to speak with two amazing founders at the NRF show in New York City, live and in person. They are really innovators in the retail space. I really enjoyed this session. Michelle Bacharach, CEO of FindMine's, and Katie Hotze, CEO of Grocery Shopii. Now, I know through our discussions, kind of booking the interview, you knew of them or knew them. I think you knew both Michelle and Katie before interview. How did you know them, and have you worked with them before? Talk about that a bit.
Well, both I actually know through the same connection, though a few years apart. I've been an advisor and mentor at RevTech Ventures, which is an early stage retail technology VC firm, seed capital firm here in Dallas. And Michelle was part of, I think we called it an alumni program. So she wasn't part of the initial cohort. She came through the XRC labs. But I was an advisor, kind of mentor to her early on, and we've stayed in touch. And then Katie also was at a RevTech event several years later. So this is probably like 4 or 5 years ago now. And I met her there. And I've been just keeping tabs on their progress over the years. And it was great to be able to chat and get in depth on what they're up to. And I think a lot of the listeners, I think they'll find their stories interesting and find their businesses interesting, but hopefully they'll also find it interesting, their perspective on how to grow a company, how to attract venture capital, some of the particular challenges they face as female founders.
We'll get to that right after the news. Before we get to the news, reminder, folks, the next time you and I will be together will be March at Shop Talk. We'll be podcasting there, and folks will be able to see you live on the stage. Check the show notes for a nice offer for retailers who might want to be attending the show. All right, we're going to pick a couple of big stories, and then we're going to do some quick hits. The biggest story of the week clearly is Amazon releasing their quarterly earnings. We record this on Friday. They just released them late last night. There's a lot to, as always, there's a lot to go through, a lot to parse, lots of tea leaves to be read. What did you make of their quarterly earnings?
Oh, you're right. It's always interesting in a lot of respects. I think particularly because of some of the struggles they have, maybe it's a little bit more interesting than usual. So just to touch on a few things. First of all, it was very interesting for me to see how analysts and the press and Wall Street reacted to the earnings. Several people were like, oh, they're really good. Other people were like, they're really bad, and kind of everywhere in between. I think objectively, they're not so great, and I'll come back to that in a second. But the other thing that is always interesting with them is they're really hard to understand what's going on because of the way they report and because of the complexity of the business. So it's fairly easy to look at AWS, their cloud computing business, because that's really a very, very separate business. But just about everything else is somehow intertwined. The retail business has got first-party retail and third-party retail, and advertising is part really of the retail flywheel. And then you've got Prime membership, and Prime membership is like prepaying for delivery, but you also get streaming, so all these things are so overlapping. And I guess the other thing to say about it is this was a quarter where they took a bunch of charges, impairment charges, particularly around severance, but also because they own a big stake in Rivian, they mark their value of that to market every quarter. So sometimes that's very additive to earnings, and other times, as was the case this quarter,
not so much.
So when you look at the overall earnings picture, it's very much distorted by a number of kind of unusual charges. But if you go down below that and try to parse that out, I think some of the highlights were AWS, which is very profitable and is one of the fastest growing parts of Amazon, had pretty strong growth by most people's measures. It was up 20%, but the growth has been slowing, and it's the slowest quarterly growth or year-over-year growth in a quarter since they've broken that out separately. Whether that's just a function of the law of large numbers or whether that's a function of corporate pullback. I mean, in the call, Andy Jassy said that they are seeing some corporate customers pulling back on their spending. So he was not suggesting it's going to be a slow growth business, but that growth might be a little bit more difficult given the economy.
It's also the case with AWS that they were kind of first out of the gate, and then Alphabet and Microsoft have been coming on strong to eat away at their business. I mean, there's
they have a lot more competition for sure. Yeah.
Yeah. There's a big government contract, I think, with the military or the U.S. government that they won or lost. And so it just highlights that there's more, they have competition now, which is just going to take an edge off a bit of the growth as it always will in some way, shape, or form.
Yeah, absolutely. Then when you get to the non-AWS parts, so that's basically, not to get too in the weeds here, but pretty much the way they break out segments are North America and international. And that's, again, this bundle of things, and they provide some top line information, but not a lot about what the cost structure is and profits and things like that. But the highlights were, if you look at the product pieces, so that's really the retail, what we kind of think about as sort of typical retail, sales were down year over year, down minus 2% in the US. And this is the fifth consecutive quarter that sales have been down. So that's not awesome. Clearly, there's some other players in e-commerce and related fields that are growing faster. Services, on the other hand, continue to be a pretty good place for them. So that's both third-party seller services and some smaller things, subscriptions, but also advertising. So advertising is the big driver, but that growth there is slowing as well, but still up 19%. But that's very, very profitable. When you put it all together, their operating sales performance outside of AWS has continued to deteriorate. A lot of the issues you can kind of tell from the way they break out the numbers have to do with fulfillment costs going up faster than sales, SG&A costs going up faster than sales, marketing expenses going up faster than sales. So you can really understand why there's so much talk around their trying to get more productivity, get capacity out of their fulfillment system, the layoffs they've had, and those kinds of things. Kind of strategically, I guess I'll say one other thing, which definitely spooked a lot of people on Wall Street, was that their guidance was weak. They basically said that they expect on the consumer side as well as the corporate side with AWS that there will be a slowdown, that their revenue growth will be pretty modest, and that their earnings growth will also not be that great.
Not what we're used to hearing from Amazon.
Definitely not what we're used to hearing. Strategically, we got a few tidbits, and some of this was what was said on the earnings call, and some of this is things picked up elsewhere. But Andy Jassy did say that they were pausing and rethinking their Amazon Fresh grocery strategy. Also, it appears that they are doing a similar thing with Amazon Go, because they did not talk about opening any more stores, and they're closing a couple apparently. Separately, we did hear that, and this is kind of funny also how the news was interpreted, Amazon closed one of their recently opened stores in London, but they just opened two new ones, like last week. And apparently have made, love to go see this, but apparently have made some changes to the way the Just Walk In and Just Walk Out technology works. You no longer have to use it essentially to get into the store and to leave. So my guess is they've started to learn about what some of the improvements need to be, and they're starting to test it, but they're not going to just keep opening stores until they know that's got something that's really scalable. So, but they have brought in two pretty senior people into the grocery division, one person from, I think, Woolworths and another from Tesco, I believe. So, you look at this and it looks to me like they're doing kind of an intense rethinking process, and TBD where and how they will go forward. The other thing I'll mention just quickly is they didn't say anything about the Amazon style stores. They've opened two. I have not heard about any others being planned. There was a lot more talk about their move into department stores and apparel, largely on the part of industry, not so much from the company, because as we know, they test a lot of stuff. Sure. But that was sort of conspicuous in its absence. And given the layoffs they've done in the physical retail division, it definitely seems like it's a pause and study, refine kind of mode, as opposed to they're going to step on the gas anytime soon.
Such a sprawling business, so many different things to talk about. And I think you covered it really well. And I'm sure we'll be coming back many, many times. So interesting to see them pivot. I personal experience, I was shopping at the Go store in Manhattan, and it was interesting when I looked at the receipt. The receipt was, "Thank you for shopping, just walk out." And I'm like, that's interesting. Yeah. Really, really trying to brand the just walk out technology versus Amazon Go. All right, let's take a real quick hit on a bunch of little things that we mentioned. Let's start out with Sam's Club and roll through it.
Well, Sam's Club. So we had people. I'd encourage you to go back and listen to the interview we did with Tim Simmons, their head of product. Continues to do really well. They're kind of stepping on the gas when it comes to growth. They're going to be opening, I think it's 20 new stores, which is like a 5% store increase, which is not massive in some respects, but this is a business been around a long time, pretty mature. They are actually building these stores even bigger. So as much as we talk about the shrinking of physical retail, here's a company going in the other direction, much less
category too, right? They're not the only player in the market. I mean, there's there's Costco on every corner. So the fact that they can even expand the concept is impressive.
Yeah, and the fact that they're putting in even bigger stores, much more of a hybrid model, like we've talked about with Target, adding fulfillment capabilities, curbside pickup, those sort of things. This harmonized retail experience, I think is pretty interesting. So again, here's an example of a company that's pretty mature, kind of an old dog learning new tricks, and that's able to allow them to grow physically, even in the face of some of the other headwinds.
All right. Job reports, U.S. job reports look pretty strong.
They surprised on the upside. I guess, we're kind of like a broken record on this. Just it continues to be pretty amazing in the U.S. at least that the unemployment rate is very, very low. It's down to 3.4%. We're actually not seeing wages go up that much. So I think this is, in some respects, encouraging. Not only it's great that people are employed, and obviously if people are employed, they're able to spend money, which is good for the economy, but we're not necessarily seeing indications that the strong job market is pushing up inflation. So I think that's pretty encouraging for the future.
And Kohl's has got a permanent CEO, who's Tom Kingsbury. Do you know Tom? Do you know the name?
I do know the name. What people can't see is we have our notes here, or I have my notes here, and I have quotation marks around permanent because he was interim.
What's your point?
He was interim when Michelle Gass left. He is now viewed as permanent.
Whatever.
He's, I don't know Tom. His background is in traditional department stores. He was at Filene's a bunch of years ago. Then he was the CEO of Burlington Coat Factory. Has been on the board, I think, many years, and did step in as indicated as the interim. Like I said, I don't know him. Having, it's not obvious to me that like a 60-year-old white guy who spent his life in the department store is necessarily the right profile for what Kohl's is going to need to transform and be relevant. But, perhaps I'll be proven wrong.
Speaking of proven wrong or right, someone's setting their eyes on Nordstrom. This looks like a little bit of trouble for them. Yeah,
so Ryan Cohen, who's the founder, he made all his money basically through the founding of Chewy's and selling that to PetSmart. He is currently he's the chairman at GameStop. He got a lot of press over the past year or so because he set his sights on Bed Bath & Beyond, trying to make some changes there. Spoiler alert, that hasn't really turned out all that well. Yeah. He's kind of got this reputation of being a gadfly or whatever you want to call him. There's probably some not so nice names for it, but an activist investor, I guess we could say. And now he is putting the pressure on Nordstrom. He in particular, which relates to the next thing I think we're going to touch on, he in particular wants to kick Mark Triton off the board. Some people may know that Mark Triton, aside from having glasses that look very much like mine, was the CEO of Bed Bath & Beyond, brought in from Target. And again, that did not turn out so well. So there's more to the story than just that he was the former CEO of Bed Bath & Beyond. But, the idea is that Nordstrom's has not performed very well in the last few years, which I would say is true, that the family is kind of too cozy with the board. So if you own Nordstrom and you've seen your stock go up, that's what's going on. We'll see what happens next there.
Well, Bed Bath and bye-bye, perhaps, because they're kind of running out of options here. There's more negative news coming this week. What's the state of things? Do you see a turnaround?
I don't. In fact, I wouldn't be surprised if by the time this episode airs on Tuesday that they have filed for Chapter 11. They missed a big interest payment. They announced a bunch more store closings. They closed a big distribution center here not too far from where I am in the Dallas area. So they're doing everything they can do to conserve cash, but the underlying operating performance is so bad that I don't see how they continue without going into bankruptcy. And then we'll see what happens. But if it doesn't happen by the time this episode airs, I expect it will happen very shortly thereafter, unfortunately.
More financial stuff, Rent the Runway, restructuring their debt. I guess that's good news for them, right? I mean, gives them a little bit of breathing room.
Yeah, we talked about in the predictions episode in particular about the reset among these disruptor brands. And one of the issues, aside from just the difficulty of getting to profitability, is many of them have fairly weak balance sheets. And that's obviously an issue if you don't have a lot of cash or ability to raise money at attractive terms, and you're blowing through a lot of cash on an operating basis, which has been the case at Rent the Runway for a while. So yes, they bought themselves some time. They moved back given the size of their business, pretty sizable payment of $275 million, and they restructured their debt so they don't have to pay that back until October of 2026. So it's
kicking the can down the road for a couple of years at least, right?
Yeah, it remains to be seen how that's all going to sort out. But I will say that it's encouraging. I think that a lender would be willing to structure those sort of terms, and I think the fact that they moved the maturity out so far certainly suggests that this thing's not expected to be a big turnaround in the next year. But that does give them quite a lot of time, and I wouldn't be surprised to see more of these kind of restructurings. As well as just some of the other things we touched on in the predictions episode.
Just before we get to our excellent discussion with Michelle Bacharach and Katie Hotze, a few words from our presenting sponsor. MarketDial is an easy-to-use testing platform and emboldens great decisions, leading to reliable, scalable results. With MarketDial, you can be confident in the outcome of your in-store pilot initiatives before rolling them out across your fleet. In a challenging retail climate of supply chain disruption, labor shortages, and dynamic customer behavior, the need for reliable insights has never been greater. Validate your remarkable ideas with MarketDial's in-store testing solution. The proof is in the testing. Learn more at marketdial.com. That's marketdial.com.
Well, we have yet another set of great interviews coming from the NRF show. Today we're joined by Michelle and Katie. How are you guys?
Good. Thanks for having me. Doing well. Thank you.
We generally like to start out with having our guests just tell them a little bit about their personal and professional journey and the work they do, and then we'll kind of dig into things. Michelle, you want to start out?
So I'm Michelle Bacharach. I'm the CEO and co-founder of FindMine's. We're a software company serving fashion, home, and beauty brands and retailers and helping them to do better storytelling through creating inspirational, shoppable content for all their products. I started the company because as a consumer, I kind of feel like I don't know what I'm doing when it comes to fashion or beauty or interior design, and I always needed a little bit more help. And my background was in product management, so I actually had experience learning how to solve customer experience challenges, remove friction from customer experience journeys, and work with developers and designers and things like that to make an idea come to life. So that was the start of the company and the idea and my background. I kind of fell into product management. Honestly, I graduated college, didn't know what I wanted to do, decided to work at a startup so I didn't have to really decide what I wanted to do. I could wear a lot of hats. And I got to work on the privacy policy and decided I didn't want to be a lawyer. And it was really great to kind of feel my way through. And I kind of fell into product management and fell in love with it. So that's what started it all, honestly.
Hey, I'm Katie Hotze. I'm the founder and CEO of Grocery Shopii, and we are a digital meal planning platform for grocers. We allow shoppers to get through meal planning and online grocery shopping in 5 minutes flat, and we deploy recipes from the hottest food brands and food bloggers. I created the company in 2018 in a dollar store notebook. I was that sort of entrepreneur. I spent 18 years in consulting. My background is in digital marketing. So I really just loved the data side of marketing. My master's degree is in data. And it allowed me to just really solve my own problem. Some of the startups I had created on my own had failed. And I dug into my own personal problem as a working mom in the suburbs of Chicago, trying to figure out how to get dinner planned when I didn't have time to dig through recipes and figure out how to input it into a website and get it delivered to my house.
Right.
And so I basically just created a prototype in PowerPoint, no less, and designed what I thought the UX should be. And then I got laid off 6 months later, took the severance money, and I was off to the races.
Wow,
Yeah.
nice.
And speaking of right after the races, you just arrived here at the NRF Big Show, so you're kind of fresh off the airplane.
Fresh from the airport.
Now, what brings you to the show? Have you been able to? It's pretty early in the morning. You probably haven't walked the show yet, but any first impressions as you've been here?
Yeah, well, my team's been here. So,
Right.
so it's one-stop shopping for me. So I can come in, I have meetings lined up all day, and it's with partnerships, pretty much.
Great.
So they do all the pre-work, and I kind of come in and decide how we move forward for the rest of the year based upon certain relationships that we have
fantastic.
been nurturing. Yeah.
Now I'm hearing that it's a record number here. Is the team reflecting back to you that it's been busy
Mobbed
to them?
was the word.
Mobbed.
Mobbed.
we like
Yeah.
mobbed when you were here to talk to people in the
Steve and I were
industry.
saying it's a big difference since last year.
Yeah.
Big difference.
I mean, we're trying to index it back to like when was the last? 2020 was the last full,
Yep.
the full one. So they say it's even bigger than 2020, which was would
That
put
makes
it in the
sense.
fours.
Pent up demand from last year when
Yeah.
people were worried about Omicron, and then when people were just not able to fly or travel.
Yeah.
Now everyone's able to do that.
Yeah. So for you, let's talk about that a little. Let's follow that thread a little bit. So these trade shows, everybody says, are they worth doing, and whether attending or presenting, and when you think of a trade show like this, what do you come here for, and do you have a plan, and how do you approach it?
Yeah, well, this one I'm lucky because it's in my backyard. I'm based in New York, so it takes a little bit of the analysis out of it,
Right.
in terms of the ROI. And honestly, like I told you guys, I'm halfway through my maternity leave right now, so like being
Congratulations.
thank you.
Boy or girl?
A boy, my second boy. But yeah, like being able to dip back into work like midway through mat leave, like I wouldn't have flown somewhere else to do that, right? So I think for me in this particular year, the fact that it is in New York made it all the more possible for me.
Right.
But normally at NRF and this year also, what I'm looking to get out of the show is obviously meeting with existing customers because everyone is kind of in the same place, and normally we're all so distributed. Meeting with my team because now my team is across the world. We have someone in Paris, we have someone in Montreal, we have someone in Argentina. Like it just everyone's here. So we all went out to dinner last night. It was the first time we were all physically together ever, or since they'd started, And then the other thing is partnerships. I also, we have a lot of tech partners. We're in the booth with SAP, who's a partner of ours, and it's like SAP Startup. It's called SAP.io. It's SAP Startup Experience Center, basically. And we met the startup to the right of us and the startup to the left of us and decided that we're going to partner with both of them. So it's a serendipitous kind of thing as well, where you just meet people who you're like, what do you do? And you're like, wow, how could we partner? And I already am thinking about ways that you and I could partner.
So we talked a little bit about the inspiration for your companies. Can you give us a little greater sense, maybe start with you, Michelle, in terms of what problems are you solving for your customers? How does FindMine work? Just a little bit more of the details around it.
Yeah, definitely. So we kind of think of ourselves as B2B2C. So like we're actually solving a consumer challenge similar to your company that is customers don't necessarily know how to look great in an outfit when they're on a website evaluating an isolated product. So you don't just wear a shirt with no pants and no jacket and no shoes. That would be weird. You have to put it with other stuff.
We don't judge here, but yes, that does seem.
Yeah. But basically, customers aren't experts at the categories they're buying from, but the brands or retailers selling to them are. And so there was this big gap in terms of the expertise between those two things. And thinking about, going to a beauty counter in a department store and you don't even necessarily know what you need. You're just make me look great. And you walk away having bought $500 worth of stuff and you're like, how did that happen? It's because that person is an expert. They know more than you. They help you be a better version of yourself. But that experience completely falls apart in 90% of the places that consumers are interacting with a brand or a product. The e-commerce site, the email, social media often. And a lot of times people are turning to influencers on TikTok or Instagram to get their information, their expertise, and the brand isn't participating in that. So how does the brand actually help the customer achieve a better version of themselves without losing them to an influencer? So I started looking into that. And the reason we're a B2B company is that the brand and the retailer is the one who has more friction even than the consumer. It's so hard for the merchandiser to create a complete furniture set for every single product that they sell. Forget it. You're just never going to have time to do that. And so they want to share that expertise. It's just they're structurally blocked from doing that.
Right.
And so our artificial intelligence amplifies what they're already doing. We're not putting anyone out of business, putting anyone out of a job or making anyone obsolete. We're actually taking what they're already doing and scaling it to the 1,000th power so that you can actually show a customer a complete outfit for every product around every furniture piece that you sell, or like how to do a smoky eye, how to do the anti-aging regimen. It's that beauty counter experience wherever the customer is interacting with the product.
Very, very cool. How about you, Katie? Can you give us a little bit of
so
behind the
interesting to hear
scenes?
Michelle talk, because we're B2B2C as well, and we broke into the space. I'll tell you how it happened. We found recipes for a certain protein, and they were living on that protein's website, and it's just stagnant data, right? Just floating out there, and they were making it shoppable. And they thought they'd kind of check the box. And I'm like, I'm telling you right now, I am the person you need to get to. At the time, I was the 40-year-old mom. I'm like, you're not getting to me when that is floating on an outside experience, right? You need to be inside the shopping experience. And one of the first times I tried to get a speaking op in this industry in grocery, they said, I had someone say to me, shoppable recipes, nothing new. And I was insulted. Shoppable recipes? That's what he thinks I am? And so we came into the space with the desire to create a platform, not a shoppable recipe, but a platform. And it's API driven, it's cloud native, it's machine learning enhanced, and it adapts to the shopper. So when you come in, you pass that token, you're completely authenticated on the way in the door, but it's unique to you. So you're writing a code unique to you. And I think that's what's so awesome about what we do, because we made it really, really fast for the busy parent. That really is our target. And so we're about 90% women, and the data's agnostic, whether you work or stay at home. You're busy, you don't have time to figure out what you make for dinner, and we need to help you do that. What was so interesting is as we unpacked the problem, we spent 2019 just really behind the curtain, figuring out what is the need and what does the customer actually want. That's actually how I met my CTO and co-founder. We met at an incubator, and it is a customer discovery incubator. And so you're just making cold calls constantly to people who would actually be the buyers. That's how we figured out we're actually B2B2C, right? But the food brands are spending a fortune on professional chefs to create a recipe so that their buyers have the best experience with their product, but they didn't have a direct path to get that recipe in front of the actual shopper who's actually going to make that purchase, right? And then online grocery shopping was 43 minutes on average, right? 84% cart abandonment rate per McKinsey, May of 2020, right? So height of the pandemic, it actually spiked versus decreased.
Oh, interesting.
Well, yeah, and you think fear...
Yeah.
Fear should be, people should be kind of powering through the COVID fear to get your groceries delivered, but cart abandonment spiked. And so it's really telling of a broken UX on a grocer's website. And so we come in with a platform. It is semi-customizable. The grocer just drops it right in, and it's accessible from the homepage. It looks and feels like the grocer's site. And it really allows the shopper to use recipes that are just handcrafted from the brand. We use hot food bloggers as well. We use food bloggers all across the country because honestly, they have really high conversion rates. Yeah. And it just allows shoppers to expedite the shopping journey. And because we integrate directly with that cart, it's the opportunity for the shopper to fill their cart and then go do everything else. You still need bananas. You still need milk, right? Like you still have your list. And when you're not integrated, you can't provide that level of a clean shopping journey. And we're 4 clicks. It takes anywhere from 24 to 44 clicks on average for a recipe you find online to get added to a cart. Yes, yeah, so we just blew it up, and that's why it's 5 minutes or less. It's actually technically about 3 minutes and 45 seconds to get through our shopping journey with a week of meals.
To be precise, man, you got it
plus
down.
Or minus.
Well,
plus or minus a few seconds.
We do.
That's your life.
Yeah.
You've both been very articulate in the genesis of your organizations and the founding and the ethos behind it and the mission. Let's talk about growing the business and any hurdles you've had to overcome as you've grown the business. I mean, you clearly had a clear path. Katie, talk about that a little bit, about what you've had to overcome that perhaps was unexpected or something that you had to get past to get both of you to where you are today.
Really 2 key things. One is we had to convince a male-dominated industry that meal planning was a problem. Flat out. I'd get to the table and it was just not the person with the problem at the table often. Okay. And so we had to convince them of that. That was a hurdle that cost us a lot of time. When you look at my early contracts, it was either women or our very first contract was a man with 7 children. No joke. I mean, it's people who got the problem directly, intimately. So number 2 was there's a real lack of understanding of fundamentals of digital marketing in the grocer space. Per my perspective, as a performance marketer, you come in and you go, the websites were not designed to to really think about conversion Everyone's just trying, because everyone, do you really go to your grocer's website to get recipes? You don't, right? And so they bury them. So when I got into the industry and I was trying to get people to work with us early on, I was looking for partners, I was looking for a grocery store, like who's going to work with us, right? And people would say, well, Katie, we have like 300 recipes on our website. No one ever clicks on them. Right. Let me teach you the difference between Pinterest, Facebook, and Instagram and you, right? They create fresh content every second. And you've had the same 300 recipes on there since 2005. No joke. And the links are all broken. Some of the biggest grocers in the country, in North America, links are broken. Yeah. And so you can't compete with that. We can. Let us come in and do that for you. We work with the biggest food brands in the country, and we can just literally adapt a hyper-personalized experience for shoppers, and our shoppers come back 4 times more often.
It's so interesting. I know a lot about the food and grocery business. I've been in it myself, and I report on it. And just that intersection, the brands would go to the grocers and say, we got lots of recipes, they're yours, and list our product. But what you're articulating is, yeah, sure, but they're not integrated into the social media and the speed of social media, and B, they just kind of sit there. And how do you integrate them? It's a fascinating solve for. I could see how that's not a problem. I got lots of recipes. Kraft just gave me a bunch of recipes I don't need. You know what I mean? Like that kind of thing.
Social influence is really powerful right now, too. So just being able to start to tap into how the food bloggers and in different ways that people are making buying choices and how to take that brand that's off to the side and get them tethered in.
Michelle, let's talk about your journey. Again, clearly articulated the problem you're solving, but as you got to where you are today, what did you have to overcome to get here?
Oh my gosh, I don't even know where to start. I made so many mistakes at Stanford Business School, wrote a case study about the mistakes that I made, and I helped to teach it in the class. Wow. It's embarrassing, but at least it can help other people avoid those snafus. I would say a similar one to yours is like pitching people, whether customers or investors, who are not the first party person who has a consumer problem. And I have 2 examples of that. One is pitching VCs, usually white men, who will be like, oh, that's interesting. Well, I don't do a lot of shopping. Let me ask my wife what she thinks. Yeah. First of all, if you're a VC doing a focus group of 1, fail. Get a different job. Right. Like, that's not a good data set.
And again, by the way, your wife is not the average shopper.
Exactly. She's not. She's a Connecticut, like
a person of probably of means,
probably of means. Coastal elite, And that's just not representative of how most consumers experience shopping. And then the second example is Damon John. So I was not on Shark Tank, but this was like a different kind of pitch competition for fashion tech companies. And at the end of my pitch, he goes, yeah, but don't people know how to like style themselves? Can't they just look at it and be like, oh, I could wear it this way, this way, this way? I'm like, no. Like, you are a fashion designer because you have that. You're the 1% of the population who has that part of your brain that can visualize a pair of trousers like 50 different ways. My husband can walk into an empty room. He's a real estate developer. He can walk in an empty room and see. And
just visualize what it can look like the potential and what it fits with what and all that stuff. Yeah.
And most people don't have that. They don't. And so if you work in fashion, if you work in interior design, like, you have gravitated towards those industries and jobs because
it's not random.
You're an outlier. Yeah. And so you are not your consumer, and having to put yourself in your consumer's shoes can be really challenging sometimes because you're so different from them by design. And then I have to convince them there's really a problem here. And so some of our best customers, we've heard from several of them. We're like, how did you find out about us? Or why did you decide to like solve this problem? What made you want to complete the look on your product pages and do a personal styling program via email? And they're like, our customer surveys, our focus groups, our customers have told us we don't know what we're doing. Help us. And it's amazing to have that happen, but it's almost serendipitous because not everyone's asking the right question in those surveys. Like, they might be missing a huge opportunity. Sure. And we're increasing customer lifetime value by 150% when you serve your customer like this. Yeah. So I think that's kind of the, other than the like self-inflicted pain of fundraising errors and all those things, I think that's been the biggest challenge. But it's gotten easier, especially social proof is important to other retailers too. So now that we have, our customer list includes like like a who's who of top brands, Mitchell Goldball Williams and Home and like Land's End and fashion. And we work with Adidas, and we were part of the LVMH Maison des Startups program. Like now it's gotten a little easier, but in the very beginning, like
how do you get that momentum, right? It's when you look back, you can reflect on how you got here, but getting that momentum going and getting that started.
Yeah, one of the things I reflect on a lot is, so my last job before starting the company was at Univision, so a media company, and we always talked about multi-platform. So there was a team for linear television, there was a team for mobile, there was a team for desktop. And I get that you have to structure your org in some way. Sure. You have to make some kind of delineations because there's so many people. How do you organize them, whatever. But the problem with that was we thought we were acting as if it mattered to our customer where they're watching their telenovela. They don't care. They don't even notice. Like, how many times am I watching Stranger Things on my TV versus my phone versus my tablet or whatever? Like, I don't even know what device I'm on. I'm just watching the show.
Nor do you care.
And retailers do the same thing. Yeah. We talk about the store, the social, email, like there's all these different teams. And from an organizational standpoint, you have to do that. But you have to work so hard to put yourself in the shoes of the customer and cast yourself in their role. And the same thing with socioeconomic status, right? If you're a senior leader, you are not in the same boat as most of the consumers at most of the companies. And it's really hard to do that, but it means everything.
So for both of you, we touched on this a little bit, but if we think about members in our audience who might be entrepreneurs or be thinking about plunging into the entrepreneurial world, what advice would you give them? And I think in particular, one of the reasons we had you on is also to get more perspective of the challenges you had as female founders or underrepresented. And we've talked a little bit about that, but maybe particular from the lens of some of the communities that are underrepresented in the VC world. What kinds of advice are top of mind? Katie, you want to start us off?
Yeah, sure. I've evolved greatly. And so when I came out of this, this is the furthest I'd ever had a startup go. And then we just, once we took off, we're just raising a lot of money and we're going to just power through, and whatever it takes, we're going to make it. And that was 3 years ago. And what I've learned is that, and I'm just be blunt, I had to start mirroring the guys. Right? Because when you're in pitch contests, I did pitch contests for years. I'll still do anything, right? But you're one or two women in a pitch contest, maybe. And you start to watch the guys. And, I did a pitch contest with a guy who's in cryptocurrency, and we stayed in close touch. And he's just really loud on LinkedIn, right? Dropping data, raw data, big memes and just really pounding his chest all the time. And I remember about a year and a half ago, I was raising a large sum of money, and I'm like, I've got cool data. And I literally took a screenshot of some raw, I'm talking 100th decimal points data, right? And I just dropped it on LinkedIn to see what would happen. I'm like, this is how we boost loyalty 4X. Boom. And it exploded. It's the one post that's done the best. But I remember thinking, you have to start mirroring the people that are loud and robust and confident, and because you have to exude confidence to raise money. And I think I'm Southern, and I was raised Southern female. I had to learn how to sell. I've had to learn how to do a lot of things. And I'm super open about it because I think that there's so many awesome women who could be breaking through. Your corporate, I used corporate for my benefits. I had my babies corporate. And all of a sudden it's no, it's me time. I spent 18 years in consulting. Let's go, right? But you do have to look at who's doing it really, really well, and it's oftentimes the guys, and I found it's oftentimes the guys in sort of disruptive industries, and I just started sort of mirroring their tactics, and it's worked for me.
Yeah, I mean, I would say my two pieces of advice, regardless of your status, in terms of representation, are always the same, and I feel like a broken record saying it, but I feel like they're super important in terms of my success. Which is, if you want to start a company, my first advice to you is don't do it. Seriously, because you have to have something so meaningful in your own life. You believe in your ideas so much to get up every single day when shit is the worst. My first son was born 2 weeks before the pandemic shut everything down. And then 3 of our customers went bankrupt and stiffed us on a combined, I want to say $500,000 in money they owed us, let alone the forward-looking revenue, right? So we lost 70% of our revenue almost overnight. I'm a first-time mom. We don't know what's going on in the world, who's are we all going to die? Like, it was a very stressful time.
Yeah.
And like, the resilience that you need to get through that only comes from two places. One, you have some childhood wound and someone told you couldn't do something and you have to prove them wrong. That's your Elon Musk model.
But enough about Elon. Yeah. Right.
Steve Jobs, like, there's a bunch of people like that.
Right.
Comes with a lot of risk, by the way, personality disorders and all that kind of stuff that comes with a deep childhood wound, like that can mess up a company's market cap in all the ways. But the other source of that drive...
First thing is don't spend $42 billion on anything. That would be my general piece of like
the ticket price is a little too high there. Yeah. But I mean, like the second source of inspiration or like drive is the idea. Like you just have to have this in the world. So the reason why I say don't do it is if you can't ignore me, then you have that drive. Like I had the idea underlying FindMine for literally 7 years before I did anything with it. And I did like a little business plan competition at business school and then didn't do any more with it. And it just kept going and going and going because it's not in the world. Why hasn't someone done this? Like I had to birth this idea because it was that important to me and I saw that big of an opportunity. So that's my first piece of advice. My second piece of advice, if you do it, just don't die. Because honestly, like it's like musical chairs. Like if you are still standing, you will succeed because everyone drops out for all the reasons. And it's so easy to drop out because it's so hard to like thread the needle. But if you can not die, don't die. And then you'll be doing great. And then in terms of like underrepresentation, I think I have like a slightly different experience than you because I found that when I tried to adopt the like white male playbook for VC, it backfires. Like people will discredit some of those qualities in a woman, right? Like they're like you're bossy or you're too aggressive or whatever, and or big for your britches. Like you get a lot of that kind of pushback. And so in terms of what I've tried to do is just know that I'm going to get 2% of the funding men are going to get, and plan my business with that in mind while still going for the big. We've raised just under $10 million, so it's not like I haven't done it, but every time I've gone out to raise 10, I've gotten 2. And so I've had to do that 5 times in order to get 10 total. And so I think if you use the playbook that men are using and expect you're going to get that $10 million check and have the burn in all of your company like kind of lined up to need that to succeed, you're going to go out of business. You're not going to make it. So you have to shoot for the stars and like have the big, I mean, we're on track to be $1 billion company. Like we have the vision to back that up, but I'm not spending like that today. I know I have a contingency plan that if I don't get all that cash, I'm still going to make it to that. So I think that's important for me to have in my playbook that like, I know that when I lose 70% of my revenue overnight, I'm going to be okay because I can adjust and be dynamic. Whereas if you look at like Fast, right, the spectacular disaster that was, they were spending $10 million a month.
Oh, okay.
And had $600,000 in revenue. So, like,
I'm not great at math, but that
doesn't work.
That seems like a difficult
scene.
Doesn't work.
Yeah.
Or equation.
I mean, listen, this has been such an interesting time. It's so great to meet you both. Such great stories. I mean, I think there's so many lessons to learn, and thank you for sharing both the interesting concepts behind your organizations and the journey and all this stuff. So thank you very much for joining us on Remarkable Retail Podcast. It's been a real treat meeting you both, and I wish you safe travels up in the city and back home, and thanks again for joining us.
Thank you.
Thanks for having us.
If you like what you heard, please follow us on Apple, Spotify, your favorite podcast platform, so you can catch up with all our great interviews, including Organized for Growth, our interview with Satish Malhotra, CEO of The Container Store. New episodes of Season 6 presented for another season by our friends at Marketile will show up each and every Tuesday. And be sure and tell all your friends and colleagues in the retail industry all about us.
And I'm Steve Dennis, author of the best-selling book, Remarkable Retail, How to Win and Keep Customers in the Age of Disruption. You can learn more about me, my consulting, and keynote speaking at stephenpdennis.com.
And I'm Michael LeBlanc, consumer retail growth consultant, keynote speaker and producer, and host of a series of retail trade podcasts, including this one. You can learn even more about me on LinkedIn, and you can catch up with Steve and I in person at Shop Talk in Vegas, March 26th, and a month later in Barcelona at the World Retail Congress, April 25th. Until then, safe travels, everyone.